Hello and welcome. This is BloombergQuint Stocks to Watch. This is where we take you through three stocks which are in the news and take them up with the experts that we have. Well, today the stocks that we are going to talk about is going to be Biocon, emphasis on the back of earnings, and ITC, considering we are expecting earnings from the company. And to take us through these stocks, well, we are in conversation with Siddhartha Khemka. He is the Vice President and Head of Research at Motilal Oswal Securities. Siddharth, good morning, and thanks so much for joining in. I'm going to
Good
start
morning.
with the first one, and that's Biocon. What we've seen here is that it's a mixed quarter. There's no doubt about that. When it comes to the top line and the bottom line, again, however, is ahead of expectations. So revenues did rise 15%, slightly ahead of what we were working with in terms of projections. Margins coming in once again did contract, but slightly higher, and that was the same when it comes to profit, which declined 26%. Siddharth, what's your view on Biocon? We've seen a lot of strength in a lot of these pharma companies. Where do you stand on Biocon in comparison to the sector?
So Agam, very good morning to you and the viewers. Biocon numbers, as you rightly said, are a little bit ahead of the expectations. Biocon is not the usual pharma company which we talk about either in terms of the generics or the APIs. Their strength lies in the biosimilars, and even in this quarter, if you see the growth in generics, which is almost 36% of the revenue, was 16%, and the overall top line growth was about 14.5. So a lot of this growth is being fueled by the biosimilars. They have recently got approval from the US FDA for on the insulin glargine, again another biosimilar, which is expected to drive the growth going ahead. So this quarter, yeah, more or less in line to slightly better than expectations. Going forward, they have also received an EIR for the generic API facility as well. And overall, the Mylan and Biocon combined market share in the biosimilar has been pretty steady, and that trend in the US is something that we believe should drive growth. So we are expecting almost 40% plus earnings growth over the next 2 years for Biocon. And to some extent, yes, the valuations are factoring in. If you look at the PE ratios, they are on FY22, it is about 33, 34 times. To some extent, the market is pricing in this growth. So yes, we are positive on Biocon from a long-term perspective, but the upside, given the premium valuation, could be limited.
Okay, fair enough. Well, from there on, we move on to the next stock, and that's Mphasis. Mphasis, again, do remember, has been strong of late because of expectations of steady earnings. But a couple of days ago, we also saw a surge in Mphasis because of its stake in Majesco. Of course, that's a completely different reason, because the windfall all stakeholders of Majesco will have, because it's gone ahead and sold its US business. But when it comes to earnings from Mphasis, we have seen a sequential decline of 2.5%. Its margins have also contracted sequentially, and this was against an expectation of higher margins according to Bloomberg consensus. Net profit declined 22% sequentially at around 275 crores. Siddhartha, what's your view on Mphasis from here on?
Yeah, Agam. So if you look at Mphasis results on its own, not the best of the IT numbers that we have seen so far. There were better numbers. So overall revenue was down 4.6%. EBIT margins contracted 60 basis points. Yeah, that is where the concern is. You have seen some of the other IT players showing sharp improvement in margins in the current environment. One good point was the deal wins for the quarter, about 260 million in the direct international business, which was the highest ever deal wins for a quarter in a quarter for Mphasis. The con call is there today, where we'll get more clarity on the outlook. But Mphasis has not been one of the best IT mid-cap IT companies. We have been liking some of the other IT players, mid-cap IT players in the space, and as the results clearly show, there are issues, and the valuations too factoring in the earnings that the company is. So they are trading at 16, 17 times forward earnings, which is in line for a mid cap IT player. So right now we have a neutral rating, and we would prefer something like an Larsen and Toubro Infotech, or you can say a Mindtree, which are our preferred picks in within the mid cap IT space.
Very valid points out there when it comes to the margins a bit, because we have seen all the leading companies in the IT space actually see expansion in margins for this particular quarter, despite the challenges that the pandemic posed to the sector. But from there on, we move on to the one company that is going to announce earnings today, and that's ITC. It's a mammoth when it comes to the FMCG sector, but it's not going to be a great quarter. Why? Because of the weakness in cigarettes. Now, do remember, not only does it contribute to a significant chunk to the consolidated revenues, it's no longer more than half, it was roughly around half the revenues, but it's the profitability, it's the EBIT, that is the operational gains that comprises a majority of ITC, and that's where it comes from, cigarettes, because of such high operating margins it has. Because of the lockdown, well, we're going to see an impact when it comes to not only a decline in sales, but also a considerable decline in its profitability. But Siddhartha, once we are out of this quarter, and perhaps this quarter is a foregone conclusion as a washout quarter, if you take a little bit of a note moving ahead, what's your view on ITC?
Yeah, Agam. So again, ITC, the quarter is a washout quarter. We are expecting cigarette volumes decline of about 35%, which will drive the profitability down. So EBIT is expected to be down about 33%. We have seen the FMCG business, despite being resilient, HUL volumes were down 7% for the quarter. So the quarter gone by is something that market is already factoring in. What needs to be looked out for is any indication from the management about any price hikes in the cigarette business going forward, and the demand outlook for the non-cigarette FMCG business. The view here in ITC remains to some extent neutral, given that cigarette business, which is the large contributor to profits, has been struggling for last few years. The volumes growth earlier declined, and then last couple of quarters they had improved, but now again this pandemic has led to a sharp fall. If you look at the FMCG business, they have reached a scale, but again profitability wise, they have yet to improve on the profitability, and the re-rating clearly depends on the non-cigarette FMCG business, how they are able to improve the margins there and take the business going forward. If I look at the valuations, it would not be fair to compare the entire ITC business with the other large FMCG players, given that bulk of profitability for ITC still comes from the cigarette business, which is why we compare it with some of the global cigarette players, Philip Morris, BAT, and compared to that, given that ITC too has some of the FMCG business, it trades at a premium, and hence overall, from a long-term investment right now, I would be neutral. From the near term, I see the gradual unlocking and return of sales in the cigarette business could drive the stock price in the near term.
Okay. All right. Well, that's your view on ITC. Well, Siddhartha Khemka, on that note, I'd like to take a moment to thank you for joining us and taking us through those three stocks which are in focus. And with that, it's a wrap on this.
Thank you.
There's lots more lined up. Stay tuned to Bloomberg.